Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 14th of October. So we saw some really good action in the last couple of days. We had a very quiet start to the week, but the CPI numbers came out last night and they were favourable for the market. So we'll jump straight into the market and see if we can identify any trades for today or early into next week. So we'll start out here with the Aussie USD, and we can see we had a pretty nice bounce. Look, we hit lows of 61.80, really, like far out. That's as low as it's been in an extraordinarily long time. And it certainly bounced off that level quite aggressively. You can see we've got a really big hammer candle. It's very difficult to find support for it down here though, so I'm sort of looking at this with a bit of trepidation in the sense that we don't really know that the support has been found. It's just that it actually had a reaction to the news. So we're going to watch this with a little bit more care. In the first instance, I would expect it would probably try and get back to the 20 moving average and this roll reversal zone here around that 64 cent mark. That's probably the likely target for it, which is around about 100 pips away now. If I was going to probably try and trade this long, that's what I would be looking for, opportunities to actually take it to this level, to around the 64 cent mark. And yeah, that will coincide with the 20 moving average, especially once it has moved for another day or two. Now, that's going to form a definite resistance point. If we get resistance there, I would be wanting that to break before I go any higher. Otherwise, I'd be looking for a change of trend and a roll reversal to the way down. And that way, we can definitely take advantage of either side move, really. I'm not really fussed either way. Happy enough for it to go to that level, but it's got a fair bit of work to do before it gets above that roll reversal and above the 20 moving average. So in terms of how we trade it, I think that we look for longs. We can go to the 4 hour, probably the 1 hour is probably the one we want now because this has been a fairly aggressive move. If we get a series of higher highs and higher lows on this particular time frame, you can go a little bit lower, maybe see if we can get a bit of a formation. You can see we've been fairly flat. Like I'll hit the, you can see that we've seen a big move up out of it, and again, we need to really see it break this zone. Once we get past this zone, we had the initial big sell-off, then it's quickly found itself back up here again. There's only a 15-minute chart. If we get a high at around, say, the 63.20, we can start aiming for the 6400. That's a 64 cent mark, sorry. That's the levels that we're aiming for. 15 minutes is nearly going to be the way to go. We need to break above the 63.20. And then, yeah, we aim for the first level here at around the 64. Very strong resistance there, though. So that's our take profit target. And then we look for either a rollover or a daily close above the 20 moving average. Only those would make us go longer. And we keep our trades fairly short on that, but pretty good scalping opportunities. If it keels over and starts to sell off, we just aim for the lows at around the 61.80. That's the target for that one. Pretty straightforward trading. All right, we'll move over to the US dollar CAD. This one had a serious crack at breaking the high, but of course it came back down. All news related, so we're going to be very conscious that these levels have been broken, but yeah, it was effectively news that caused them to get back into the channel. This is still trading quite high, and still in my mind, trading between the 20 moving average and the high here of 138, or the high that we can really see where closes are, which is the most important one, the levels you want to be trading at. Ideally, what we want to be looking for is basically take profits at around the 138.20 and stop and take profits on the way down if we are going to look for a scalp on the way down around the 136.50 area. Okay, so in between the 20 moving average and the high there. Either of those levels will work perfectly fine because it is still confined at the moment. So while it's trading above the 20 moving average, we're not going to go bearish on this one, but there are some scalping opportunities in between. So again, the news has mucked up a bit of the movement. As you can see, we had all this waiting at the start of the week, basically flatlining and doing nothing. But now we really need to find ourselves a bit of a pattern again. So again, pretty easy targets to aim for, but look for a series of lower highs and lower lows. Okay, that's all we need to do. If you know what I'm talking about in terms of higher highs and higher lows, we're talking about the lightning bolt effect. Okay, so basically price action that does this. If we get price action that does that sort of pattern, okay, that's a series of higher highs and higher lows, then we actually start to trade in that direction. We need, as you can see, we've got a high, we've got a low, we've got a lower high. If we get a close below the 136 sort of 90 area, we're going to have this pattern. We're going to have this series of higher highs and lower highs and lower lows for a downtrend. And of course, the opposite is true for an uptrend. So what we're looking for an uptrend is the same sequence, except just in reverse. Okay, so a series of higher highs and higher lows. Simple as that. And all we need to do is look for that change of trend, and then we can trade in that direction no matter what time frame that we are on. It's relevant to the levels that we're talking about though. So 138.20 in the first instance and 136.90 on the way down. All right, we'll move over to the US dollar yen. this has been, very steady. I'll take it to a daily chart so we can actually see what is what. You can see we've broken through the highs here. We flatlined for quite a long time. Price got trapped between the 20 moving average and the 144.50 level. You can see that's a very, very strong level. Couldn't break for ages, but when it did break, it provided some great trading opportunities. That doesn't look like a big move, but it is a very, very big move in the context of pips. It was, several hundred pips really. So, what we're looking for now is realistically some sort of a consolidation pattern at that level. I'm reluctant to take it much higher in terms of where it's going. Like, I don't want to really attempt going to say 150 or anything like that, because a lot of this is dependent on what the Bank of Japan does at any given time. But it's irrelevant of what the dollar is really doing at the moment. You can see that we're basically, even though the movements are there, they're not as they're not as crazy as some of the other US dollar based pairs, and we're still seeing a fair state of consolidation and also consistency. We're not seeing big spike action. We're seeing fairly consistent waves of higher highs and higher lows, or apart from that candle, which was just news related. Again, it wasn't really huge range in terms of what it was. It was only like 100 pips compared to some of the others, and then it steadied up very quickly, and it's finding itself again at above the 20 moving average and also at a roll reversal zone. So as long as it holds above the 20, so around that 147 level, you can start looking for sort of short scalping levels. For me, it's only short scalping at this point until it breaks to a new high again, and even then we're still only going for 50 pip moves. I don't really want to be preempting big moves on this one. Keep them fairly short and sharp, but if you're doing that on this one, you're going to have a heap of trades. You would have had a heap of trades for quite some time really. So it's been a really good technical trade. And as you can see, behaving itself very steadily on all of the 20 moving average touches and making higher highs and higher lows at all the right places. So very easy trading, but again, just trade with caution and keep this one fairly short. So aim for your 50 to 80 pip moves in between the zones that we talked about. And if it starts to keel over and makes a lower high, lower low sequence on a 4 hour, then we can start targeting the 145 area again, which is this roll reversal zone, which would be the first level of support, also helped by the 20 moving average. All right, over to the dollar index, and this one's been, look, it looked like it was wanting to keel over all week, right? This is a daily chart. You can see that it was not really reaching the highs very easily, that it reached back here in September. You can see that it was starting to weaken over, and no real surprise, obviously a little bit news related as well. Came down to the 20 moving average, touched it, and it's hovering above it. What it does now is going to be very important. I think if it holds above the 20 moving average, we're going to be fairly comfortable that we're going to see US dollar strength continue, but of course a daily break below the 20 moving average, and we're going to probably start targeting the 110 again, and you can probably expect it to gravitate down here. Of course, the beneficiary of that's going to be the euro. We'll talk about that in a second, but if we see a change of trend around this level here on a smaller time frame, and by that I mean say on a 1 hour. All right, so if we go to a 1 hour chart and we see a series of higher highs and higher lows, just to make that pattern again. So if we see that, and then we see, I'll just click that like that. Okay, that sort of pattern is what I'm talking about. If we see that, that is what we're talking about for a change of trend on a 1 hour, then we can start looking at long opportunities back to the 113.50 level, around this level here, which is the previous highs. And of course, failing that, if we get the opposite and we see a series of lower highs and lower lows, then we start targeting the 110. So pretty straightforward trading on the dollar index. But let's take it over to the euro. The euro is, we'll go to the daily, and this one's obviously the beneficiary. You can see that it's trying to make a higher low. We need a daily break above the 20 moving average. For all intents and purposes, it's still in a downtrend, no question about that. But if we get a daily close above the 20 moving average, then we're going to start targeting this area around the 99 and of course the 100, which is not far away from that. So very interesting moves on this one. It failed to make a new low, just like the dollar index failed to make a new high. And it is looking, it's certainly got MACD in its favor now. Interesting to see what happens if we get a daily close above the 20 moving average, so above the 98.20. I'd be starting to target the 99 and the 100 levels for short-term scalps. But if it fails to get above the 20 moving average and starts to gravitate down again, the previous low is the first target, which is around the 96.50, and then onto the 95.50, which is the target after that, if it actually starts to break lower at a quicker rate. So really two targets to aim for on the way down, but dependent on what it does. If it closes below the 20 moving average for a couple more days, you're going to see the weakness. If it closes above the 20 moving average on a daily, then we start to target the 99. All right, we'll move over to the US 500, the all-important index here that found its support. Look, it reacted on the news, but it quickly found its feet, and it very, very, very strong support at 35.80. Okay, we know that it's very, very strong here, has been for a long time, and it seems to have held. I'm worried about that wick because, like I said, that was news related, and it's quickly found itself, trading back up here around the 36.60. All important 20 moving average close. Now, if it gets above the 20 moving average in the next couple of trading sessions, this is going to look very, very likely for a bullish week next week. So it's going to be an important night tonight because I think we need to see. Is it going to hold its gains from the previous, or is it just going to be? Was that just a flash in the pan and it's going to start, weakening again? I wouldn't want to see it weaken from here. It's not going to bode well for this level here, the 35.80. In fact, I think if the 20 holds it and it can't get past the 20 moving average and it starts to gravitate down, I start to worry for the 35.80 because I don't think that level will hold at that point. It would be highly unlikely that it probably will because it would fail to actually take advantage of the momentum that just picked up. So really, if we get a close above the 20 moving average, we start to target the 3800, which is the first target, and then that will form the double bottom that we're looking for as well. And if that works out, then we're going to be trading for the rest of the year, probably looking at the 39 to 4000 level. But still a bit of work to do there. It's got to get above the 20 moving average first and foremost. We get above there, and then we can start to aim for the 3800. If it fails to get past the 20 moving average and starts to weaken on the smaller time frames, we start to target the 3580 in the first instance, but I'm not going to be relying very heavily on that support at that point because I think it shows a very weak momentum move that is not going to be sustained. So very, very interesting trading over the next few days on this one for sure. So I hope everyone's had a great week's trading. I think it's been very, very interesting the last couple of days, very flat early in the week, but I think the opportunities are going to come next week. We'll see how this week closes out and just keep an eye on those levels that we talked about. Have a great weekend, everyone, and I'll talk to you next week.